Welcome back to this week's episode of the Vancouver Life Real Estate Podcast. We are joined this week by a very special guest, Miss Marita Lewis. Marita is a realtor in Toronto, and she works with her brokerage there, Chestnut Park Real Estate. And I believe they are an exclusive affiliate of Christie's International, which is pretty cool. And today we're going to set up a discussion, first of all, to talk about largely what's happening with boots on the ground in Vancouver, because we're wearing boots and Marita's wearing heels. And so in Toronto, we want to find out what the heels on the ground look like. We're getting a lot of noise, whether that is through stats, whether that's through headlines, whether that's through all different kinds of media sources. And we just want to get the clear story in terms of what seems to be happening. And I think there's really no better case than really starting to look at Canada's two major markets here and seeing how these interest rates have affected our marketplaces and where we think things may be going. So, Marita, before we really get started, I think it would be awesome to hear a lot about who you are, how you got into real estate, your story behind it, and then we'll kind of get into a bit more of the discussion.
Okay, sounds good. Thank you so much for inviting me today. It's really my pleasure to be here.
Yeah.
I am actually a Vancouver native, and I got my feet wet in real estate when I bought a few pre-construction condos in Mount Pleasant and Gastown. And then I caught the renovation bug and gutted a loft with my now husband in Gastown before we built a brand new home in Shaughnessy. Ooh. Loved that experience. At the time, I worked for my father. So I spent about half of my time as an art dealer and the other half managing his real estate portfolio, which is a mix of residential and commercial properties in and around Vancouver. And then about 10 years ago, my husband and I moved to Toronto, change of scenery. I worked in a gallery there for a couple of years while I got my real estate license. And then I joined Chestnut Park Real Estate, which, as you mentioned, is the exclusive affiliate of Christie's International Real Estate in Ontario. And though we have brokerage or offices across the province, I am based out of the head office in central Toronto. So our firm is known as a luxury real estate brokerage, and my business specifically focuses on properties in the central core through the eastern districts, so through the beaches. And while my clients do come from all different walks of life, I would say markets up, markets down, no matter where we are at any given point, about half of them are millennials. And I've just been awarded the Chairman's Award again for my sales results in 2022.
No big deal. Just brush that off.
It's the highest award level handed out by my brokerage.
Cool.
And
excellent.
When I'm not specifically working, I'm spending time with my husband and my 1-year-old and 3-year-olds, and or taking in the amazing cultural scene in Toronto.
Cool. Well, I like that because, when we're talking about someone's experience, when you have skin in the game, when you've done it yourself, when you've bought the pre-sales, you've renovated the homes, you've been through the ups, you've been through the downs, your perspective, it should carry more weight than people who don't do necessarily the sales volume or have the experience that you've got. So I think that's really important as we get into the discussion. And so I'll kind of kick it off here. The comparisons between our real estate markets, Vancouver and Toronto, the two major markets in Canada here. For decades, these cities have been compared against each other, and Toronto typically leads the pack, mostly because of its size and sales volume, and Vancouver tends to follow suit. With that being said, over the last 6 to 8 months, we've kind of seen a bit of a divergence where Toronto got hit probably harder in many ways than Vancouver did, respectively, with the interest rate hikes that we went through. And so with that, the last 6 to 8 months being a very tumultuous time in terms of sales, they've been very, very lean, right? And we are now seeing effectively buyers and sellers kind of grinding to a halt. They've standoffish, buyers don't see the prospective sellers have, and sellers are willing to wait in terms of a market correction to come back up to get their price. And that has driven sales volume down the toilet. So with that being said, mood in the marketplace, at least here in Vancouver, has definitely changed. We've noticed a significant tick up in terms of behavior. And so what I really want to know is, we review the stats in Toronto once a month as part of our typical podcast. And the stats don't look great, to be honest with you. But I want to know from you, what's it like? What's the sentiment like in your marketplace? Are you still seeing this negative bias? And, are people still on the sidelines? Or are you starting to see quite an uptick in activity like we are here in Vancouver?
So first of all, I just want to say that there's 6.3 million people in the GTA. And so within that, there's also so many different neighborhoods. So we have to be a bit cautious when we're making sweeping generalizations, which the press just loves to do. Absolutely, there has been a substantial slowdown.
Yeah.
So transactions are down about 45% compared to this time last year within the GTA. But that said, I will say, in my experience, there has been a very significant resurgence in 2023. So showings are up week over week this entire year, and they're now significantly higher than at any point in the back half of 2022. So in my experience, the areas that are leading the way are the most desirable neighborhoods in Toronto, and generally the lower price points within those neighborhoods. And by lower price points, I mean price between the $1 and $2 million mark. And those properties are really starting to move, especially if they are move-in ready. If they're renovated and turnkey, I would tell you, get your property on the market. There is significant demand right now for those properties. I'm going to give you a couple of examples. So there was one house that I brought buyers for this property. It was in Chinatown. So that is a centrally located neighborhood in Toronto, not typically one of the most desirable ones for a number of my buyers, but because of the proximity to downtown and because this property was turnkey, though kind of an early 2000s, maybe 90s vibe inside. Aesthetically, sure, it could be updated, but it was 3 bedrooms, 4 bathrooms on a 15-foot lot. It was a row house, so freehold, but attached on both sides, 1 car parking in the garage in the back. It was listed for $1.389. That's an attractive price point. It was underpriced. They did hold back on offers for a week. They got 16 offers.
Oh my goodness.
And it sold for 1.91.
Oh.
So
whoa.
15 people didn't buy a house that night. Unfortunately, my buyers are one of them.
Oh, sorry about that.
Yeah, unfortunately. But it shows you the demand is there. That product was specifically desirable for millennials. And the thing about millennials is that no matter what's happening in the market, so many of them are at points in their lives where there's these life changes. They're coupling up, they're getting promotions at work, they're having babies, they're getting married, they're moving back to Toronto to be with family. And so they're also looking at this as more of a long term. They're not going to live there for, 3 years and then retire. No, they want a home that they're going to put roots down in. So if it's a bit of short-term pain with higher interest rates for the sake of a long-term gain, they're in it. And then to make matters worse, I was following another property. This one was not really in the center. It was off the Danforth, so Eastern District, but on the subway line, good school district. Freehold also, so semi-detached, so that means attached on one side. It was an estate sale, so they priced it low because they had to sell. List price $995. 3 bedrooms, 2 stories, potential for a suite in the basement. It got 24 offers.
Oh my goodness.
And sold for $1,455. So again, 23 people did not buy a home that day. And they're still out there. There is more confidence in the market now in 2023 than I saw in any of the back half of 2022.
What do you think is largely driving this? And I think I'll frame it up like driving the increased interest levels in buying properties right now compared to, like you said, the back half of 2022. And again, I'll kind of compare Vancouver first so we can relate that to what's happening in Toronto. But here we've seen historically, like dating back to the 80s, real estate here never drops below 15% off of its cyclical high when in regards to HPI pricing. And right now, we're down at 14% off the peak. And so part of that is people going, okay, well, Vancouver real estate is kind of on sale right now. And we know, looking at history, not that it's a guarantee of what's going to happen moving forward, but if it does repeat itself, people know this is essentially the quote unquote bottom. Toronto is down, I think, 19% off the peak, which is a big number, especially, knowing that your average price points. Is that part of what is driving people back to the marketplace? And if so, cool. And also, what else is kind of inspiring the confidence that you're seeing right now?
Yeah, I think it's very similar over here. What I think is that people hate to buy on the way down, just psychologically. If they pay for the biggest investment in their life and it goes down another 5% this year, ooh, that hurts. They can't stomach it, even if it winds up going up 10% thereafter. So I think psychology is a big part of it. Now, the Bank of Canada, have they stopped raising interest rates? There's been talks of that. I guess we won't know for sure until we, get a little further ahead in the year, but there's a lot of chatter and they've indicated that they have. So does that mean we've hit the bottom? Some people really do think so. Some people are going for variable rate mortgages now. And so I think that's why some people are jumping back in. And then also just the things that I was saying, Dan, where there's life changes and they have a baby on the way and they need another bedroom.
Yeah. Yeah. As a dad with 2 kids, I can't get enough bedrooms. It's funny because I think when we compare the markets too, much to your comment there, Marita, when the psychology begins, when you look at it from a macro perspective, when prices come down, that's a great time to buy. But people seem to, for whatever reason, believe that the market's going to just completely bottom out and they're going to lose their entire investment. And we actually went on our podcast a couple of weeks ago and talked about this particular psychology of, for the most part, human beings suffer 2.5 times as strong of an emotion when it comes to a loss compared to when it comes to a win. So even if you're losing a theoretical loss, so if say your properties were $2 million and you could have got $2 million at the height of the market and it's now worth 1.8, okay, you're staring down a $200,000 perceived loss when really you bought the home for $1 million and it's up $800,000, right? And people are the loss pressure is 2.5 times the strength as the win, which is mind-boggling. But at the end of the day, that's how people think. And to your point, when things started correcting and coming down from sort of July onwards, well, it was before that, but really in July, we started to really see the slowdown. I think buyers waited on the sidelines to see where this was going to bottom out, where this was going to flatten out. And while I think we're near it, I think there's a lot of purchasing that's taking place right now, largely out of frustration. And that's because I think with this correction, buyers assumed that there was going to be a level of panic selling that would take place. People would get terrified. And maybe this kind of is a good segue into a recent Globe and Mail article that was published. And it said, 50% of Vancouver homeowners no longer have a mortgage. So interest rates really don't affect them, right? At least don't affect the major payments in their life. And then you look, comparatively speaking, to Toronto. And Toronto's got 43% people that own their home outright. That's a huge number too. And so when you don't have these external pressures from the Bank of Canada, for example, why would you sell your home? you wouldn't. You'll just wait for a better time, further restricting the inventory that buyers need, right? And this exacerbates the whole marketplace, especially in the major marketplaces. And so, are you seeing a lot of people when you talk to your sellers that are like, hey, I know you want X for your property, but I can get you Y today. Unfortunately, that's just where the market is. Is the sentiment like, well, we're not really pressured to move it at that price. So, I'll wait until things improve a little bit, or I'll wait till the spring market or something to that effect, because we're seeing that as well. A lot of sellers here are saying, well, I'm just going to wait until things improve a little bit. And I would also say, well, inventory is so low that your competition isn't going to be there. And you're clearly, like you mentioned a couple minutes ago, there's buyers lined up to buy the properties here. So this is going to be a really interesting, I think, where we go from here. Because I think largely we're hoping for inflation to come down. But if, people continue to have very strong job numbers and we don't have a ton of panic selling taking place, I don't know kind of where we go from here. It's a very interesting mix in terms of whether we'll see more interest rates, whether we'll see more property hit the market. Largely, I think it's just going to be a lot of frustration.
Yeah, I think it's really interesting what you're saying, Ren. I just want to go a little more granular, though, on that
Yeah,
Globe and
please.
Mail article, because I think when you're looking, and you tell me if it's different in Vancouver, but in Toronto, when I look at the people who don't have mortgages, those tend to be some of the older people. So we're talking more, boomers and up.
For sure.
Those are people who are going to need a lot of convincing to sell. They're very happy where they are. And maybe they want to downsize, but if it's not the right time, that's okay. They'll stick it out. But it's the younger people who kind of need to make those moves, as we were already discussing. Those are the ones who do have the mortgages, and they are just raring to go, either to be first-time buyers or to buy up. But the property isn't shaking loose. We don't have that coming up. I think it will be interesting also to see, so the difference in generational wealth, and then what's going to happen in terms of, parents helping their kids, and what kind of divide we're going to have, because the people who are living mortgage free are saying, sure, I can help you with the down payment. Yes, the interest rates are higher if I'm going to have to take money out for that, but it will be interesting. And then on top of that, just yesterday, City Council in Toronto approved a 5.5% property tax rate hike. That's the highest that we've seen in a very long time. So is that going to be a tipping point for some people who are saying, I'm okay just holding it? Maybe with your price going up for the holding costs, maybe that'll be just enough for you to say, no, it's time to unload. We're going to have to see.
Interesting. Let's shift now maybe into the condo segment, and definitely keeping investors in mind here. As we know, like last year, 2022, it was about 1 in 4 new mortgages was for a secondary property, namely, condos and investment properties. Now, with interest rates higher and the current cost of a condo in Toronto, we know that if an investor came in with their minimum 20 points down, they'd be sitting at somewhere around -$800 to $900 a month, negative cash flow here. So not as attractive of an investment as it once was. So are you seeing some of those properties being offloaded? And what's going to happen with the 77,000 condos currently under construction in the area, with something like 33,000 of those completing this year? Are you going to see an inventory spike in that segment? And how is it going to affect potential homeowners and the current investors?
Dan, that's such a great question. And it requires a very layered response, because I think it kind of depends on the individual here. So let's just dissect this a bit more. First of all, how many of those condos are actually going to complete this year? Because there's always delays, but there will be a significant number. We do know that. Now, as you said, traditionally new construction projects have a significant number of investors buying into them. But of these, how many of them intended to close and then rent them out? How many intended to close and then resell them? And how many they were always planning to assign before closing to avoid paying the land transfer tax entirely? And I just wanted to point that out for some people who aren't aware that in Toronto, we have a provincial and a municipal land transfer tax. So we pay double here. Yeah. So it is a significant amount of money. Currently, the average condo in Toronto is priced at $711,000. So if you are a Canadian who is not a first-time buyer, your land transfer tax due upon closing is going to be $21,500 approximately. So
talk about affordability. We could have that conversation too. I mean, the government has got their finger in so much of this issue. But anyhow, sorry to interrupt.
So much of it. Absolutely. There's red tape there completely. And then, okay, you're talking about government. Let's add on to that, Ryan. There's the new anti-flipping tax, which means that the profits from the sale will be fully taxed as business income if the seller has held the property for fewer than 12 months. That means if you assign or resell in less than a year, then this will impact you.
Plus GST too.
Oh no, HST, Ryan.
Oh, you're
HST in
goodness.
Toronto. So yeah, you're referring to the excise tax. So all assignment sale transactions are now subject to a 13% HST charge, which is payable by the seller on the profit of the sale. So all of this together means that it has never been more unattractive time to assign a condo in Toronto. So, yeah. So what this does is it highly incentivizes investors to close and rent out the units. Now, luckily, rental rates for those investors, luckily the rental rates are extremely high right now. And if they can do that, then they could resell in at least a year when their gains will be subject to capital gains tax rather than income tax. Or they could just move into the unit and use it as a primary residence and avoid paying tax completely if they're there for over a year and that suits them. Oh. But all of this is with a caveat of if they can close, because they likely qualified at a much lower interest rate a couple years ago, and they may not be able to qualify now. So I am telling my buyers that there will be great opportunities on assignment sales because anyone who is selling likely has to sell and cannot close.
Wow, kind of compelling. You're compelled me to come to Toronto to pick up a deal, but then at the same time, I don't know if I want to pay all that tax. My goodness.
Well, that's the thing. You have to have the upfront capital.
Yeah, where does it all go? Where does all this taxable money go?
Affordable housing.
Right, I'm seeing that.
I don't know. It's not going to the pothole on my street, I'll tell you.
Doesn't seem to be going to ours either.
Let's look at the other end of the spectrum of real estate. So the luxury market, which we understand you have a good understanding of. For reference, again, here in Vancouver, last year, ever since the peak, and let's call it March, April, it was a downward market. And of course, sales volumes dropped off the map as well. Yet the high end market, and for here, we're going to call that 7 million plus. I mean, it's high end at 1 million, but for the ultra high end, 7 million plus, there was still something like 145, 150 homes sold at that price point last year, which is sort of in line with the previous year. What are you seeing for the ultra wealthy, for the high end market? Is there confidence in Toronto in that segment of the marketplace?
Yeah, interesting, Dan. So I think something that we saw as an effect of the pandemic is, that K curve. And so some people made a lot of money during the pandemic for whatever reason. And so some people did get very wealthy, or added to what they already had. And those are the people who, if they'd already bought, they don't have a lot of incentive to leave. So we don't see a ton of movement up there. And then, it does depend, do you have a mortgage or not? Not a lot of those people necessarily do. When I look at the condo market, I find that the luxury condo market, so those are the larger units, those are still very desirable because that might be, a downsizer who says, no, for me to leave my house, it's going to take a lot. I want something perfect. And I can't be shoeboxed into something small. I need something that's at least 1,500 square feet or maybe at least 1,200. It kind of depends on the person. Sometimes people say, give me 2,500 plus. So they're kind of in a league of their own. And I think it's very dangerous to look at that luxury market and compare it to these headlines that we're seeing, because they're just not impacted by the interest rates the same way that others are.
Mm. Yeah, I mean, I think that's reflective. And, you've got, like Dan said, with over, 145 sales, over 7 million, that's nearly $1 billion in sales, right? And that's a massive number considering the economic environment. And, to that point, maybe a little less on the luxury side, but let's talk single family homes right now, because single family is a contentious issue in Vancouver. We're staring down things right now, like the municipal government's looking at doing what's called the Plex plan here in Vancouver, which is likely going to blanket rezone all single family homes so that they can build anywhere from a duplex up to a sixplex, depending on the lot that they have. With only about 5% of new construction projects allocated for residential single family. So it's becoming the unicorn here in Vancouver. We are landlocked, so we can't find communities to build single family homes in anymore. And in order to make things more affordable, this is the city's plan, is to densify and get smaller pieces of the lot, but you arguably get to stay in the neighborhood. With that said, the single family market that we have right now in Vancouver is floating right next to a buyer's market, 13, I think, % in terms of sales to active ratio. They were the ones, that was the asset class that rose the most through the pandemic, and the one suffering the most right now for probably very logical reasons. They got overheated. Do you think in Toronto we're seeing, I mean, obviously with, like Dan said, 77,000 condos under construction, density is a thing that Toronto understands quite well. Are you guys seeing the single family market suffer like we are over here? I mean, and it's suffer, I mean that in terms of a seller's perspective. For buyers, at the same time, I just had a listing in Fraserview, Vancouver East here for 2.8 million. I did 40 showings in 13 days, right? So for people who understand the opportunity, it's huge. But I think for a lot of people, single family has just become so unaffordable that it doesn't matter anymore. What are your thoughts on the single family market?
Yeah, great question, Ryan. I think at the end of the day, most people do want to see themselves owning a single family home. So those are still very desirable. And those are absolutely the ones that have come down the most. We're down about 20% on freehold properties compared to this time last year in the 416. So that's Toronto itself. It's also just because those numbers went up so much. They had the highest amount that they could fall. Condos are only down about 6.7%. So a big discrepancy there.
Right.
But of course, density is an issue too. I don't know if you heard about the Ford government trying to open up the Greenbelt and build in this beautiful kind of nature preserve area.
No, didn't hear about that.
It was a big controversy. Is a big controversy because they promised that would be protected, and now they're opening it up to developers with this whole plan to build as fast as they can. And I think, the prices absolutely are down there. But I think what's interesting is that, look at what's happening with immigration. So the federal government has set a target of admitting 465,000 new immigrants in 2023 and 1.45 million in the next 3 years. And so
they blow by those, FYI. They blow by those. Like that's like a walk in the park for the government to bring that in. And we've seen that because I think this year alone, we saw something like over 800,000 in terms of not just, there's 450,000 permanent residents, but then there was 200,000 international students. And then there's everyone else who's coming here with the intention of getting their citizenship or their permanent residency. And so I think the number is in 3 years is probably going to be well over 2 million but that's just my
It
hunch.
probably will. So that's a really good point because they don't count the students.
That's right.
And I think the question is also, where are these people going to go?
Yeah.
Well, likely the GTA will absorb more than any other region, and Vancouver will also take a significant chunk of those.
Yeah.
But then where will they live? There's already a housing shortage, and many of these immigrants will be barred from purchasing real estate now due to the foreign buyers ban.
Yeah.
So though there are loopholes, granted, but will this push rental rates up even more? Yeah, likely.
I think it'll sustain them.
Yeah.
You know, and
you think it will sustain them?
Yeah, okay. And the reason for it is, I believe that at least in Vancouver, we're going to run out of space, and we're going to, like many other very metropolitan cities in the world, you see far more renters than you do homeowners. And I think in the major metropolitan areas in Canada, we're headed in that direction. I don't see how we're not. I mean, I know that 60-something% of Canadians, 70% of Canadians desire to own their home one day. I just don't know if that's possible. And that's a hard reality. But
yeah, it's true. It's true. And so that's why a lot of people are really trying to gun for it now when it seems like, as Dan was saying, that prices are on sale, because comparatively they are. Yeah. It's just going to cost you more, in terms of carrying costs for the moment. But, will these pressures, will they push more Canadians to try to buy when rental rates are so high? Will it make more landlords want to invest? I mean, it all comes down to supply and demand at the end of the day.
Yeah, completely. Okay. Well, we have one last talking point here, and it's quite a talking point. And I suspect we'll all kind of have our own sort of thoughts on it here. So the Financial Post released an article yesterday, a very timely article, from Oxford Economics, saying that the economists in Oxford Economics believe that while we're down 14% in terms of prices, they believe that their highest level of probability suggests that we will see another 16% before July in terms of price correction. So a total correction of 30% by halfway through the year. I'm not seeing that level of correction. The only caveat that I want to place before we start putting our opinions out here is that not only would that correct levels to 2014, a worst case scenario was presented by them, and that's a 48% correction from peak to trough, which is bananas in my opinion. Even though they state it's got a rare possibility of occurrence. But let's just talk about one thing that is a caveat that we have to pay attention to now, and that is the job numbers, because job numbers, how people get paid, their money then goes into the economy, and that affects inflation, which affects interest rates. So if we end up with projections of 15,000 jobs and we get 150,000 jobs, I don't know how this doesn't affect inflation, because people are going to make more money. They're going to want to buy their own home because those dreams are not going to stop. And so it is possible that we will continue to see some level of interest rate hikes, possibly, or at least tabling of it. At the same time, I also feel like a lot of this is just to scare people. And so I wonder what your thoughts are. And then Dan, maybe we'll hear your thoughts on the article as well.
Yeah, really interesting. I mean, I think it also relates to those immigration numbers that I was talking about. That
big time.
It drops, but you're letting this many people in. I mean, at the end of the day, Toronto and Vancouver are great places to live. I mean, Canada's a great place to live. But it's also, when you're talking about statistics, these are just sweeping generalizations. And I just can't see that happening in the most desirable parts of Toronto. Not when I'm seeing 24 offers on the Danforth and 16 offers in Chinatown. And those generally aren't even the most prime locations.
Mm.
And I'm seeing a real uptick in Rosedale, especially in those lower price points. And by lower price points, I mean under 4 million.
Wow.
It's all relative.
Of course, it is.
Here, okay.
It is.
And I can't picture that. And I feel like if there's something, I don't know, maybe it's naive, but if there's something that I've learned in the long term, do not bet against the Toronto real estate market. There's just too many people here with money. And the bigger this city gets, the longer your commute times are, the more you're going to want to be in the central core where you can still have access to culture and excellent schools. And the same is going to be true for Vancouver as well, And so I think when we talk about this, it's going to really impact more peripheral neighborhoods, peripheral areas more so. So you have to be a little cognizant of that. And also those areas percentage wise went up the most, because if you started at 700 and you went to 1 million, percentage wise, that's a lot different than going from 1 million to 1.3, right? Like it is. So I think you can twist the stats as you want as well.
They don't do that. The Globe and Mail, the Financial Post and Global Mail would never do that to fit a narrative. I mean, I'll share like my thought on when I read, articles like this. I'm not sure a lot of the finite details that matter intrinsically to our marketplace are taken into account. For example, we often have our mortgage broker from BMO come on and talk a lot about what he's seeing in terms of applications, but also the flow of money and the flow of credit. And when you talk about the vast majority of people in Vancouver getting a down payment from their parents whose homes have gone up 600 or 800% under the duration of their ownership, then, because the big argument is, well, incomes don't sustain the value of property here. But then we're not taking, or at least the article is not taking into account that $250,000 or $500,000 is taken out of the equity of the home that's been made and given to their children so that they can participate in home ownership. And, we're seeing, I can't remember the stat, but it was a large number of applications that go through the bank have these gifts that come with it, right? From family. And so nowhere was that mentioned in the article. And furthermore, I also think, like you mentioned, when you look at the central cores, when you look at, the downtown core, the further out you get from the watering hole, the more volatile the market becomes, right? I mean, this is, the downtown, the financial core is where a lot of the jobs are. And as you go out and out and out, you become more and more susceptible to price fluctuations. And so I think, like you said, we'll see probably bigger fluctuations in things like in places like Chilliwack or Abbotsford or even Surrey, for that example. But when you get into, the Vancouver core specifically, we've seen some movement, but not a ton of movement, not the kind of movement that I think a lot of people were expecting. And so again, I think short of a big inflation spike, which would, require us to raise interest rates that would break the economy, generally speaking, at this point, I don't see a 30% drop myself. Dan, what do you think?
Yeah, these articles are interesting. I mean, first of all, what is Canadian real estate? Is that a Kitsilano condo or is that a detached home in Saskatchewan? I don't really know what it is, but yeah. Sure. Let's also note that this article has no references as to why prices are going to drop 14% from here. It's just like it comes across as a dart thrown at a dartboard, to be honest. And okay, let's look at the two major cities that we were discussing today, because those are going to influence these numbers the most. Mm-hmm. In Vancouver, GVRD, all the way, our big land mass that we have here, median prices, for example, have been incredibly stable for 8 months. Today, as of February the 16th, we're actually at an 8-month high in median prices today. Okay, we know volumes are ticking up, and now we're seeing prices ticking up. Average prices are at a 6-month high today. We have debt insolvencies at an all-time low right now. Sorry, for mortgage insolvencies are at an all-time low today. if those start to turn around and increase, we know those won't even flush out for 12 months.
Mm-hmm.
We know credit card and other debt insolvencies are increasing, but still below pre-pandemic levels. And then, like we said, we've got this incredibly robust economy, incredibly robust jobs market, and we've got immigration hitting all-time record highs. I'm sorry, I don't know what data they're looking at, but those 4 or 5 metrics alone show complete stabilization at a minimum for me. So no, I do not think we're going to see another double-digit reduction in home prices, Canada or provincially, anywhere. So that's where I feel today.
Interesting, because last week we had the regional director of infrastructure for PCL on our podcast, a massive constructor throughout the nation. We're talking hundreds of millions, if not billion-dollar investments in the sort of 5 to 10 year projection. They're seeing, and what they know is a tremendous amount of influx of new people and also an aging demographic, and that we're going to need to supplement that with more and more people and more growth. And that's exactly what the government is planning to do. And that's reflected in the major infrastructure projects that they're building. So when you look at it from that perspective, yes, the prices will ebb and flow. Yes, demand and supply will ebb and flow. But in terms of the market dropping 30%, in no way, shape, or form would they invest the level of money that they're doing if they felt like their projects would be under scrutiny from the government, right? And much like you said, don't bet against the house. I think if homeowners saw a 30% reduction in the value of their homes, their local MPs would hear about it. Just saying. 70% of Canadians own a home. And I think that, when you affect somebody's potential retirement by 30%, you're going to hear about it.
Yeah.
So, I actually just thought of one more piece I wanted to add to that too. And let's remember, it's about 1/3 of all homes have no mortgage on them. Right. So again, further showing stability. And of course, Vancouver and Toronto have a higher average of mortgage-free homes. Mm-hmm. So these people, price-wise, these are the people that will never panic sell. These are the people who are going to help sustain a baseline price.
And if they're older,
I think that
too,
adds to it too.
Well, yeah, but also if they're older, and kind of what you touched on earlier, Marita, if they're older, let's say they're in their mid 50s or maybe late 50s, and they're thinking of downsizing, they don't have to. I mean, they may wait another decade. They can. Maybe they'll wait until their mid 60s before they actually sell their home. And so that is further going to restrict inventory. And we need inventory in order to get price adjustments down there. And if we're not, and that's a big segment of home ownership, is not coming to market with their inventory because they're not going to get their price right now, and they also just don't need to, then that product will never hit the market, right? And that'll cause more and more buyers to pile on each other. And here we go again.
So maybe to wrap it up, and maybe put you on the spot here, what's your somewhat prediction for the Toronto market in the foreseeable future, even let's call it 3-4 months?
So one thing that I'm seeing is we're having a milder winter than I think I could ever remember. It was 15 degrees yesterday. That was delightful. Wow. And I know. And generally, that kind of spring surge is once the snow melts. But we've barely had snow. There's no snow on the ground now. And so I'm wondering if that spring market is going to happen a little bit earlier. We've got Family Day weekend coming up. Maybe people are going to get their stuff on the market. And I'm really hoping so, because I've got a lot of buyers who would just really like to buy a house.
Yeah.
So I think we're going to see a bit of a resurgence in the spring, and that's going to help with the consumer confidence, the sentiment there. I don't know if it's going to be a bang up year. We're never going to see what we had during the pandemic. But I think that
nor should
it's a time.
FYI.
Nor should we.
Yeah,
that was tiring.
Well, not only that, it's just not sustainable in so many ways.
Yeah, for sure.
Prices shouldn't go up 25-30% in 2 years. It's crazy.
But I'm optimistic. I think it's time for buyers to be creative. Do they buy something with a tenant? Do they take on a project? Because those are the best deals right now. and maybe do something a little outside of their comfort zone, change their plan a bit. But those people are going to do really well if they have a long-term goal.
Cool. I kind of feel the same over here, Dan. I think, knowing what we know, if you can get into the single family market, you should be getting into it, because in the next 10 years, it'll be impossible to get into. The same really exists at every tier. If you can get in, you should, but remember, don't buy something for a year, buy something for a minimum of 5, if not longer, and you will be okay.
Yeah.
Okay, guys, cool. Well, I think we'll wrap it up there. Thanks again for Marita for coming on the pod this week. Looking forward to another quarterly update from you, see what's happening with the heels on the ground. And appreciate your insights and also helping all of our audience realize that even though the press may believe that the world is coming to an end, we're not seeing that.
Well, thank you very much, Ryan and Dan. It was my pleasure.